Hello guys, today I'm going to say about the final accounts. Final accounts is somewhat difficult guys, but by learning and by doing practice of the problems and the final account sheet, it is very easy. So it is mainly used in the business purpose. So it has four types guys. That is first thing is trial balance, trading account and profit loss balance sheet. These are the four types which are present in the final account. So final accounts is a combination of trial balance, trading account and profit and loss balance sheet. So let us see that first thing guys, trial balance. What is meant by trial balance and how to do the trial balance? So, trial balance is a statement of debit and credit balances extracted from the book with a due to the test the arithmetical accuracy of the book. That means we need to say that guys. We need to say that what is meant by debit and what are the things will come under debit and credit balances. So if you extracted these are from the book. So it is some mathematical calculations we need to do here. Mainly it is based on the debit and credit calculations guys. So now note, this note is more important guys. Closing stock, that means closing stock. So will not be considered while preparing the trial balance. So closing stock will not be considered while preparing the trial balance. Closing stock means guys, whatever the stock which is left with us when we are closing the shop. That means if it comes to the month ending, we are closing all the stock details. So whenever the stock which is left with us, that stock is called a closing stock. If the month starts and some stock is with us, so that stock we will call as a opening stock. So whatever the stock will left at the month ending, it is known as the closing stock, and whatever the stock which is present with us at the starting of the new year or month, so that is called as the opening stock guys. In a business calendar, the closing stock and opening stocks will start at opening stock. That means in business calendar starts from 1st April and it ends at 31st March guys. 31st March. So we have the calendar, that is our calendar will start at 1st January and it ends at 31st December. But the business calendar will start at 1st April and it ends at 31st March. So whatever the stock which is left us at the closing, that means 31st March, we are closing all the stocks which we have. So that is called as a closing stock. And for 1st April, which whatever the stock we are opening, that is called as the opening stock. Okay guys, next. Okay guys, let us see that whatever the things and whatever the matters will come under the debit and whatever the balances will come under the credit. This is the example of that means these are the things which are comes under the credit. That means in the debit and credit we need to display them. Let us see that guys. Capital means guys whatever the amount or the profit which we have, that means which it is left with us at the year ending. So if you start an business and after one year you are going to count the things, whatever, that means we are going to count the investment whatever we got. So in such case, by removing all our expenses, that means whatever we have investments, by removing our investments and whatever the profit we got, that is called as the capital guys. So capital always comes under the credit. Credit means whatever the incomes and whatever the gains and profits we got, that is called as the credit. Whatever the incomes and gains we get, it is called as the credit. And whatever the expenses and losses we got, it is called as a debit. Whatever the expenses or losses we got, it is called as a debit. So capital will comes under the credit guys. Next, land and building. So whatever the land and buildings we have, that means we are going to buying them. So those are comes under the debit. It means we need to pay for them. The things whatever we are going to pay amount for them is called as a debit, and whatever the things we got in the profit, so it is called as a credit. So here lands and buildings are comes under the debit, And plant and machinery, by seeing the machinery you can say that guys we are going to buy it, so it comes under the debit. So here equipment is also similar to the machinery, so it also comes under the debit. Furniture, we are going to paying for the furniture guys, we are not at all getting any in return, we are not at all getting anything, so furniture will comes under also debit. Next, cash in hand. Cash in hand means guys by getting, that means by keeping the cash in our hand we are not at all getting any that means profits, so it comes under expenses, so it is an expense. Cash in hand and cash at bank, these both are expenses guys. Cash is the real account, so cash in hand and cash at bank are both are the, that means that comes under the debit. So next, debtors guys. Debtors means the debts, whatever the, that means we call it as a appulu guys, we can't able to get them back, so appulu is also it is one type of the expense which we are going to get. So debtors will come under the debit, so we need to pay that, it means we can't able to get anything in the return. So here bills receivable, so whatever the things we are going to receive, by seeing the receivable you all will think that receivable means we are getting and it should comes under the credit side, you all will think like that. So here we are receiving it, so it should comes under credit, you all think. But receivable means we are getting the statements, that means bills receivable, we are getting the statements to pay them, we need to pay these things, so it comes under the debit. So whatever the things we need to pay, but they will give that bills receivable, that means we are getting the bills which we need to pay. So in the same way, bills payable means but the bills which are to be paid by the others to us, that means others are going to paying the bills for us, so those are called as the bills payable. So bills payable will comes under the credit side and bills receivable will comes under the debit side. Next, stock of raw material guys. Here machinery, furniture and whatever the things it will be comes under the factories, that means these are the raw materials, finished goods, these all are guys comes under the debit, that means we can't get anything profit and gains in these things, so for these things we need to pay them, so the things which we need to pay will come under the debit side and the things which will be get in the type of profit and gainings those will comes under the credit side. So next, purchases guys. Purchases means we are going to purchasing the goods which we want, so purchases is also the debit side. So next, carries inwards. Carries inwards means guys, it has another name, the name is sales returns. So carries inwards means that is we are getting them, so as it is as like as bills received, that means here carries inwards means we are getting the goods, so we need to pay them, that means if you purchase anything goods, so we need to pay the money for it, so it is called as a carry inwards and it is comes under the debit side. And carry outwards means, that means that means other shareholders are going to buy our goods, if any others will buy our goods, so they will give the money to us, so they will be comes under the credit side guys. Sorry guys, in that means in trial balance these two, carries inwards and carries outwards, both comes under the debit balance, that means carries inwards the goods which we are getting and we need to pay for them, so inwards means the goods which we are getting we need to pay the money for them, and carries outwards means we are going to supplying the goods for the customer, so here also whatever the expenses and whatever we will get we need to pay for them, so we are going to whatever the goods we are going to exporting to the customer, those are called as a carries outwards, we are going to sending the goods to the customers. So carries inwards means whatever the goods we are buying for ourselves, so these both are in these both cases we are going to paying the money, so these are comes under the debit balance, in the trial balance only guys. So next thing is that is a sales. Sales means whatever the things others are buying for ours. That means if anyone are buying our goods, then we are going to call it as a sales. Those sales are comes under the credit. So credited guys. Those sales will comes under the credit balance. So here purchases will always comes under the debit balance and the sales will comes under the credit balance. So sales in return means the sales which they bought will be sending us in return. So it will be comes under the debit balance. Next thing is purchase debtors. That means whatever the purchase, that means whatever the goods we have bought, we are going to return it. So it comes under the credit balance. Next, interest paid on any, if you borrow any loans from the bank, the interest which we are going to pay it. So from our hand it is going, so it is comes under the debit balance. Next, commission or discount received. Guys, here received, by seeing the names received, we can say that it is confirmly comes under the credit balance. Receivable, that means we are going to receivable, we don't know when. So it comes under the debit balance. Received, already we received means it comes under the credit balance. Next, it is the salaries. That means for salaries also, for employees we need to pay the salaries guys. So it comes under the debit balance. Next, long term loan. So long term loan will comes under the credit balance. Bills payable, I already told that bills payable will comes under the credit balance guys. So here bills payable and here bills receivable means whatever the bills we are going to receive and we need to pay the amount for them. But bills payable means they are going to whatever the profit we are getting. So that is the bills payable. Here creditors will always comes under the credit balance, and debtors, if they gave any debtors, see here they already give. So this comes under the debit balance. So here advances from customers. That means whatever the advance we are going to getting from the customer, so those will comes under the credit balance. The things which we are going to get from others, those all comes under the credit balance. So drawings means for our any expenses, if you took any amount from your total capital, so it is comes under the debit balance. That's it guys. First of all, we need to list the whatever the particulars they have given for us. So after listing them, we need to divide them into debit balance, and whatever the things will come under the debit balance and whatever the things will come under the credit balance. After doing these all things, we need to find out the total. The total must be equal guys. The debit balance and the credit balance should be equal. So whatever the total we have getting here, this will be equal guys. For debit balance and the credit balance, the total should be equal. Then only we can say that we have drawn the perfect trial balance. By seeing this, we will know that how to divide the things in the debit balance and how to create them in the credit balance. That's it guys for today's class. I think you all understood what is meant by trial balance and how to do the trial balance. That means how to perform this trial balance. Thank you guys. If you have any doubts, please let me know in the comment section.